It was an extraordinary day.
No one's seen anything like this.
At the end of an extraordinary week.
This is a pivotal moment for America's economy.
In announcing an historic bailout for America's banks, President Bush admitted the financial system is in crisis.
We must act now to protect our nation's economic health from serious risk.
In a series of emergency measures, the government also moved to insure money market mutual funds and imposed restrictions on short selling, trades that bet a stock will go down. With the banking system seizing up and Americans pulling billions out of money market funds, Treasury Secretary Paulson told Congress in a sobering meeting last night that a bailout is the only way to prevent a collapse. Without it, Fed Chairman Bernanke warned, we could face a deep recession.
In historical terms, how serious is this?
Well, this may turn out to be the second biggest financial crisis in world history.
Wall Street historian Richard Sylla says only the Great Depression was bigger. Secretary Paulson says the price to fix it will be steep.
We're talking hundreds of billions. This needs to be big enough to make a real difference and get at the heart of the problem.
Add that to the taxpayers' tab. With the failure of Bear Stearns, housing loans, the government takeover of Fannie Mae, Freddie Mac, and AIG, and loans to troubled banks, the government has already put up more than $800 billion.
What essentially is the government doing here?
It's taking bad debt off the hands of financial institutions.
The problem, banks have stopped lending, even to each other, because they don't trust they'll be paid back. By buying up the bank's bad mortgage loans, the government hopes to restore confidence so the banks resume lending to each other and to us. The government's challenge will then be to find buyers for these toxic mortgages.
This paper has such a bad reputation that giving it to the federal government is essentially asking the taxpayer to write off these losses. I don't think these products are going to be easily resold by the government.
And by some estimates, the amount of bad debt still out there could add up to another $500 billion. Katie?
Anthony, obviously this has calmed some fears on Wall Street, at least temporarily, but how will we know if this will do the trick and really stabilize things in the long run?
You'll know if you start to see banks actually lending to each other again. That's a question of trust. The whole idea here is to restore confidence and trust. I mean, basically what's happened, the way Richard Sylla described it, it's like a car running with no oil in it. It's, ready to explode. They're trying to put the oil back in. Hopefully you'll see the car moving again.
All right. Anthony Mason, thank you.